Says live. Peggy, how you doing?
I'm good, Nick. How are you?
I'm really good. I'm really good. Thanks for reaching out and making time for this. On a day like today, with today's Bank of Canada announcement, another increase to prime rate, it's a great opportunity for you and I to go live for both of our audiences. We're live to your Facebook page, Peggy Hill Team's Facebook page, and to the Mortgage Wellness Facebook page to answer questions that people are inevitably going to have about today's increase to prime rate and the Bank of Canada announcement. So what I thought we would title this is the 5 things that you need to know about today's prime rate increase and the Bank of Canada announcement, right? So Peggy, point number one is that as of yesterday, prime rate was 3.2%. So right. I know what you're already thinking about point one and prime rate being at 3.2%. It's that rates are generally still good, right? So let's chat about that for a quick sec.
I don't think it matters, to be honest. The prime rate going up another 50 basis points. As far as the housing market is concerned, the damage has been done because the rate hikes were so rapid and so fast. It's kind of stunned the market. So the market is just kind of trying to find its way right now in the market. So, I mean, if they want to go up another 50, whatever, it's too late. For us, as far as housing goes, the market's already stunned. So, if you want to go up 50, if they would have went up 75 today, I don't know that it would have mattered. It would have made a darn bit of difference, to be honest with you.
Yeah. And that's a good point. See, before in one of our previous chats, and viewers today may have seen this part, but I always remember you saying this to me, and it's a great point. You said, Nick, historically, home prices and interest rates don't travel in the same direction. Yeah. And for about a 120-day period, they were, right? House prices were going like this, probably more like this, but like this. Yep. And rates were going up as well. And you said to me, Nick, they don't travel in the same direction. Something has to give. You can't increase interest rates and have increasing house prices at the same time. So now what's happened, as you mentioned, is rates have gone up and home prices have flattened, basically, right? Right. We'll get to that part. Okay. So point number 2, today's interest rate hike brings us to 3.7%. So your point on that, again, was the damage is already done, right?
I don't care.
Yeah. Now, here's the thing.
This is a beaten down realtor, Nick. I don't care anymore.
I know. So, I saw a headline today. We just recorded a video about it. The headline was oversized rate hike. So you said to me before we started recording this video, you said it's already baked in
the pie. It's
already baked
in the pie.
Right. So nobody should be losing their minds about today's headlines and the fact that there's an oversized rate hike. I mean, sure, there was a rate hike. Yeah. It was anticipated. It was forecasted. It was expected, right?
I think it would have been more of a shock if they only went up 25.
This is it. Yeah, this is it. Yeah.
That would have been the shock factor. Or if they went up 75, some people would have been like, oh my God, 75. But 50 was baked in. If they went down 25, or if they went up 25, then, there would have been a lot of talk about that, because it shows that there's insecurity in this country. So the fact that they stayed on course, they're trying to give a message. Yeah. We're fighting inflation, we're on track, and that's where we're going. So yeah, I totally agree.
Now, when you think about it, that this 0.5% increase, it's on the back of another 0.5 increase as well. So it just happened. It happened, again today, brings us to 3.7%. But that, let's talk about point 3. Pre-pandemic, right? Before COVID had started, prime rate was 3.95%. So to recap, with today's increase, we're at 3.7. Pre-pandemic, we were at 3.95%.
Right. So we are less than pre-pandemic.
You got it.
Guess what we aren't, Nick? The home prices are different.
Yes. So tell me about that. That's what I want to hear.
More elevated than they were pre-pandemic. And this is where the market is running into trouble. So absolutely, we have, these rates were going to have to go up 100%. We're not going to live in a state of emergency forever. This is it. Yeah. However, you can't possibly expect the market to be able to absorb these rate hikes and keep the prices the way they are. So something's got to give here. And I don't think it's the Bank of Canada, because they're in a trajectory to cure inflation through interest rate hikes. So it would lead a person without a crystal ball to, figure out from this that prices are probably going to drop further.
Yeah, exactly. And comment on Facebook, it all changed direction so quickly, right?
Yep.
So, right. So, we knew it was coming. We knew it was coming. It arrived. We're here. And, the media is putting it out there like it's something new that just happened. It's earth shattering. It's oversized. And like you mentioned, it was not oversized. It's already baked into the pie. We knew that the government was going to try and curb inflation through policy, through monetary policy, increasing interest rates, basically, right? Yep. And they did it. They did it quick. And there's been a major correction that's already happened. So, yeah, no, I want to hear your comments on this.
I just think I in my heart, I believe that the government thought the housing market was sturdier than what it was, that it could actually absorb all this. I think it was their way of cooling it. But as they did in 2017, you bring a sledgehammer to the party and, you feel the effects, and we are feeling the effects. And I think, obviously in hindsight, had these changes been made 2021, it wouldn't be the shock factor that we're feeling in 2022.
Totally. They waited too long, right? It should have been slow and gradual.
Too long.
Yeah. So,
and the 2022 increases were ridiculous. January and February prices were ridiculous. And unfortunately, a lot of people sold during that time. Yeah. And now they're trying to close. And guess what? Now we're running into problems. Now appraisals aren't appraising. Now we're seeing buyers not being able to sell the home that they had, that they purchased because they had no choice. Nobody was buying with conditions. Yeah. And so here we are back at it again.
So tell me, how does that look for a seller in this market? How does that look for a buyer in this market?
Well, I told my agents yesterday, and a lot of times we'll go and sit with a seller and they know what their neighbor sold for in January, and they are expecting the same price. And, we're very honest with them, that is gone. Like the only way you reach the top is when you start going down. That's how we know we've reached a top. Well, we knew in February we reached a top because you can only pull an elastic so far and it snaps. So it snapped. But the problem is, any market is a market. If you're buying and selling into a market, it's a lateral move. We're still very much in seller's territory, just so I want to make it clear.
Yeah, that's interesting.
We're about 2 months of inventory in Barrie. Innisfil's a bit higher, or really is a bit higher, but 2 months of inventory is still not tragic. So if you want to sell your home, we can still sell your home. You're just not going to get what they got in January and February. But guess what? Those poor people are dealing with, trying to close deals now. So, did you really lose anything?
Well, and the interesting thing is, like, everybody was trained to be it's an interesting behavior. Okay, so your house sold for $1 million. I lived out on the same street. 5 years ago, if you sold for $1 million, I would hope to get $1,025,000. The next guy would hope to get $1,050,000, $1,075,000, 1.1. But in the market that we were just coming out of, if you sold for $1 million, you were taking phone calls, and I was taking phone calls from people that said, "Well, he sold for $1 million, so I got to be 1.1 or 1.2." Yeah. And the new behavior is, we're not going this way, and we're not going this way. We're kind of going this way. So in recent days, if someone sold for $1 million on the street, we hope that same house down the street will also be $1 million, right? It's set that new standard. It's not going to go, $1,950,000, $900,000, but it's going to be $1 million, $1 million, $1 million, or somewhere in and around there. That's what we're hoping to see. Right. So interesting point. You said, in January, we were at the top basically, and it's only going to happen once, and people know it's not going to return, not for a long time. The other thing that's not going to return is interest rates with a 1 in front of them. It's not going to happen. So if you have an interest rate, particularly a fixed interest rate, 1.5, 1.6, 1.7, 1.8, 1.9,
you're laughing.
Count your graces. Now,
laughing.
And here's a very, here's a very interesting point as well. most mortgages do not ride out the 5-year term, right? There's a crazy statistic that's like 85% of people break their 5-year term before the 5 years. So the people that have those really great interest rates, 1.7, 1.8, 1.9, they may not even see that 5 years through. But fixed interest rates today are touching 4%. So house prices are down, interest rates are up. Okay. So before we, sort of bring that to what that really means for the market, let's address point number 4. The Bank of Canada is going to meet again in July.
Yep.
They skip a month in August. They meet again in September. You and I both know what's going to happen at those meetings, right?
Yeah, rates are going to go up.
And everybody else that's watching this video should know that as well. So forecast it. It's what's happening, right? Interest rates will continue to go up. What's going to happen with home prices, Peggy? I know you don't have a crystal ball, but just based on what you're seeing right now. So July, another meeting, skip a month in August, another meeting in September. We know interest rates are going to go up at those meetings. So what does that mean for house prices?
So, I mean, if they're going to follow the trajectory they've been following, then obviously they're going to go down, because that's just what we've seen. Every time we get a rate increase, we get a price drop, because less and less people can qualify to get into the market. And it's not even about so much the interest rate itself. It's about what you have to qualify for and what you need to service that debt. Like, I think $4,000 a month for a first-time buyer to service a debt on a townhome is ridiculous.
Yeah. Yeah.
I'm sorry.
Yeah.
I would not do it.
Yeah.
So I don't need shelter that bad. It can't be that part of your budget. Like, it's ridiculous. So
yeah, honestly,
there will come a time, there'll come a spot, because we're still, the one interesting thing that we're seeing in this market, and it has to be pointed out, is that you would think when prices are dropping, that people would know that, house prices are dropping and everybody's going to put their house on the market. That's not happening. It isn't happening, whether it's because, people are thinking they're going to wait it out, whether it's because, they can't afford to, whatever.
Yeah.
We're not seeing a crazy influx of listings. We're not seeing that. And, typically in a panic market, you would see that, and we're not seeing that. So that's
that is interesting,
because supply and demand is the name of the game. And if our supply, no matter how battered our demand is, if our supply doesn't go up in the same way, then we're okay. So they can raise the rates, they can do whatever they want, demand is going to fall, but as long as supply doesn't escalate, double, then we're okay. So that's the one fly in the ointment, is that people are just not running to list their homes to say, oh man, panic selling. We're not seeing panic selling. We are seeing some holes where people have bought and now they need to sell. That we need to work those out of the system, but those will be worked out in the next couple of months.
That's what I was going to say as well. That 2017 was a little bit of a similar situation, right? We had high prices, and the people that bought in the spring, many didn't close in the fall. And what we've revisited, you and I, in past videos as well, is that 2022 numbers, for example, like current 2022 numbers, are still higher than the high of 2017. So these things work themselves out, and we only hope that, those people affected are a sample size of the population, meaning it's a small amount of people that are affected by it. You can find a solution for them as well, right?
Yeah.
So how about buyers too?
Right. So I mean, with buyers right now, like, obviously they're in the same situation as the sellers, except on the opposite end. They're thinking they're going to go down further. They're going to go down further. And you're not going to know you hit the bottom until they start going back up. So interestingly enough, our stats have come out for this month as well today. Yeah. And where you see decreases, where our sales price is back down another, 8% or whatever it is this month, last month. Yep. And the problem is that's not a true number. It's the median, not the average, the median. But we've had a lot of higher end sales. Yeah. In Cook County. Like, we've had, it seems that people that, buy and sell over $2 million are not affected by anything that goes on with monetary policy. So we've had a lot of higher end sales, which affects the median price and the average sales price. So the interesting thing I want to tell you is that places like Innisfil, their average price actually ticked up a couple of points last month.
Oh, interesting. Yeah.
Isn't that crazy? Like you would never think that.
I wondered if that would actually go down because people weren't commuting into the city. One of the big draws to higher prices in Innisfil is just simply its closer proximity to Toronto, making it easier to commute. I grew up in Newmarket, and I'm always like blown away when I see prices in Bradford, for example, because when I grew up in Newmarket, the peripheries were less expensive, right? Like you moved to Bradford or East Gwillimbury, for example, was less expensive. And now, you move from Innisfil to Bradford, and there's a price increase from Innisfil to Bradford because it's easier for commuters as well. So it's interesting that you note that like people are working from home still, for example, and the prices still went up in Innisfil.
But that's the thing with these markets. And that's why I stress to people, they really need to talk to a professional, because not all pockets are the same. Like, would you have known that Newmarket got hit much harder than Barrie did?
No, I didn't. I didn't. Yeah.
They did. Would you know that the rents are much better in Newmarket than they are in Barrie?
I didn't know that either. Yeah.
It's actually, it's so there's a lot of this market is funny, and it's you really need to know your stuff to be able to really analyze where you're at. So not all pockets are affected the same.
Yeah.
Not all areas are affected the same. We've seen a 20+ decrease in Barrie. It's actually probably about 25. When you look at, if you had $1 million home, and $1 million in January, February bought you a 1,700 square foot 2-story in Barrie.
Yeah.
It no longer buys you that. It buys you a 2,200 square foot home.
Yeah. Yeah.
So that's the difference.
Yeah. And Christian is asking in the comments, are offers more acceptable on homes now? I think what he means is like, can I negotiate an offer on a home now?
Absolutely. And much to people's disbelief, realtors love markets like this more than they love the market we were in.
Hey, mortgage brokers do too.
We hated having no conditions and offers. It's stressful.
Yeah.
It's very stressful. And, there's hiccups all the time. But now you can offer, you can put your financing in, you can put your inspection in. But at the end of the day, you said something to me interesting yesterday. And I truly believe that when you buy a home, you buy a payment, because shelter is one of the things you need in life. So if your shelter payment at this point is the same as it was in January, I don't understand why the buyers are gone. I do understand that less buyers can qualify, but however, because the prices have dropped, the affordability is the same as it was in January. So that part has me a little stumped. But again, human nature, buyers are thinking the market's going to go down further.
It's just education. That's all it is. It's just education. And Peggy, I promise everybody watching this, you and I are going to do another video. It's probably even more important than this one. It's the topic that you and I chatted about yesterday. And I'll just give everybody a nutshell here, okay? Peggy comes to see me to buy $1 million home in January. And as she's a first-time home buyer, it's just under $1 million. She's going to put 10% down, and I give her an interest rate of 2%. Okay. Her monthly payment is $3,900 a month. Peggy didn't buy. Peggy comes back to me now, and I say, Peggy, I'm really sorry. Interest rates have increased. They've doubled. You go from 2 to 4. But you're going to go see my great friends at Peggy Hill team, because the same home that you were going to buy for $1 million in January potentially now be purchased for $850,000. But my interest rate's double. Hang on. Because you're paying $150,000 less for the home, even though your interest rate has doubled, your payment is exactly the same. Exactly the same, like within $10. And after 5 years, you owe less in this new circumstance, okay? Because you paid less for the home. You paid substantially less for the home. And there's no way that an interest rate of even 4% will cost you an extra $150,000 in interest over 5 years, which means there's a great opportunity in this market. Like I even hate to sound salesy in this, but you can buy a home at a great price. To answer Christian's question, you can negotiate your price. Hey, you get a condition on financing. You can bring your folks in to go like take a look at the house and get a home inspection. And everybody knows that the house is going to close, which is a really great point as well, right?
Yep.
Now, on payment, the other thing that I mentioned to you yesterday, like buying the payment, Michelle in the comments. So I'm going to read you the first comment. There's two, actually. So Michelle, this one's for you, okay? My concern with interest rates is that when we go to renew, we won't pass the stress test. It's really
Exactly.
worrisome. Okay.
Exactly.
Now she followed up. You're going to be really happy for her. She said, we bought our home for $647,000. 4 months later, it was worth $1.2 million. Fabulous, right? Fabulous.
Amazing.
However, she's saying when we renew, interest rates will be higher. Can we pass the stress test? The answer is likely yes, Michelle. Like, I don't know everything about your situation, actually know very little about it, but I would go as far as saying you won't have any problems. Here's why.
Yeah.
When you purchase your home, I'm going to say that you probably put, the minimum down payment down 5% or 10%, and you have an insured mortgage, which means you have a 25-year amortization. Your home value has grown to the point where you now have a conventional mortgage. And the government says on a conventional mortgage, we can increase the amortization to 30 years. And because you have home equity, we can use that home equity for things that currently cost you money: car payments, credit cards, and lines of credit. So what we do is we take a whole holistic view at your expenses. And we say, maybe we stretch out those payments. Maybe we include some of the other stuff. And we, one, make sure that you pass the stress test. And two, make sure that you have an affordable payment for your family so you can stay in your home and not be worried about your mortgage renewing. So Michelle, if you have more questions on that, I'm happy to just answer your generic questions. You don't have to be a client of ours or anything else. I don't want anybody worried about not having to meet the stress test or anything like that.
And in all reality, the government brought the stress test in when we were in an accelerating market. So the prices were going up. They had to figure out some way to buy some insurance in case the prices came back down. Well, if the prices do come back down, and they have to some degree, if they keep going down, the stress test won't be necessary.
Yes, exactly.
So it's not guaranteed there's going to be a stress test by the time you need to sell your home, Michelle. So I wouldn't worry about that. And the other thing I want anybody watching that owns a home in Simcoe County to know, in Ontario and Canada for that matter, we are probably 50% of GDP. I think if something like housing is that big of your GDP to a country, they're not going to let us fail. They're not going to blow the doors out and we're all going to be homeless, and that's not going to happen. And as far as Simcoe County goes, we are still very much in a seller's market. If you want to sell your home, you can sell your home. It's all about price. It just depends on where you are, what area you're in, and what you can get for it.
And Michelle made a great point here. Okay, so I'm not sure how long ago she purchased $674,000. Her home went to 1.2 million. Maybe her home, if it was 1.2, Peggy, is now worth $1 million or 950.
Yep.
But she paid
money.
Yeah, I mean, she made $300,000.
Where would you have made that money? You wouldn't have made it in the stock market because they've taken a bigger tumble in housing.
Right. So Peggy, you and I have worked together for a long time. You remember all those price breakdowns that we put together for mutual clients, let's say clients purchasing rental properties. We used to put in there, here's your projected ROI, cash flow, mortgage paid out. And then we put this magical line in that said appreciation. And you and I used to use 3% per year to be conservative. Now, if they bought a $500,000 home, the next year we forecast to be worth 515. Okay. Not 815, not 915, not $1 million. No. So, those times were great. And if a client like Michelle bought for 675, went up to 1.2, woohoo, and came back down to 950, that's fine. She made great money. She's still happy. And everybody else in that situation should be as well. But like you said, don't be worried about the stress test. There's ways to get around these problems for sure. Which brings me to point number 5. And I know that you're going to love to emphasize this because it's demystifying the news, okay? So point number 5 is that prime rate is directly tied to variable rate mortgages and home equity lines of credit. It's a really important message. Those with a fixed rate will see no change to their rate or payment following today's announcement.
Right.
It's great news, right? But people are calling our office. I know they're calling yours saying what's going to happen? What's going to happen to my house price, requalifying at renewal? Is my payment going to change? Is my rate going to change? If you have a fixed rate mortgage, nothing is changing. And if you're not planning to sell or buy, and you're just concerned about the market, you likely have nothing to worry about. But Peggy, as you always say, reach out. You're happy to answer those questions.
Absolutely.
So are we.
Absolutely. And our biggest, reason for doing this video today is because the numbers look astronomical and they're not, and we just want to take the fear and the panic out, because there's no need for fear or panic. Like we are still in a very strong seller's market. Things are moving, even though they're not moving at the same pace. 7 days on market was our average. Well, we're probably looking at 30. So it's not happening overnight. Patience is a beautiful thing. However, we are not in a dead housing market. So please don't ever think that. Nobody is stuck. Nobody, you don't need to worry about anything like that. So we're not there. We're good.
Yeah. And this is good news for, like if you have the good news for people that have a fixed rate, for example, their payment rate doesn't change. It's still great news actually for variable rate clients, because they had like some of these variable rate clients had rates of like 1.2% for the last 2 years. Now it's creeping up, but they still have all of that ground to make up. Like, I mean, they save thousands of dollars by having these products. Now, from a housing perspective, sellers are still in a great position because, as you mentioned, we're still in a seller's market, right? Like supply and demand dictates that. It's not that Peggy's opinion is that we're in a seller's market.
No.
Statistically, factually, we are in a seller's market. And it's great news for buyers, because we know that a home that was priced like, the scenario that I gave you in January at $1 million may be able to be purchased for say $850,000 or $900,000. And despite the interest rates being higher, the payment will be the same. And after 5 years, those buyers will be further ahead.
And for my buyers out there that are listening and are thinking, oh, we're going to wait longer because this market's going to crash. We're going to wait for the prices to come down even further. Well, I think that's kind of a silly way to look at it, because this market's not going to crash. We may see a little bit of an adjustment, but by then the mortgage rates will be even higher and you may not qualify. So if you can afford a payment, buy a house. Seriously. Buy a house. They've come down. They're priced well. If you can afford the payment, buy the house. Do not wait for the bottom of the market, because you're never going to find the bottom. You're never going to find the bottom, because by the time you do, they'll already be on their way up.
Yep. Yeah.
And fundamentally in this country, if you look at the supply and demand issues we were having, yes, they were tied to the cheap money, 100%, but we still do not have enough housing. So any buyers out there who are thinking this market's going to completely crash and come tumbling down, I have news for you. That's not going to happen.
Especially in those categories, right? Categories of homes that traditionally first-time home buyers or investors or retirees are all trying to purchase. Those home prices are not going to come down. There's too much demand for those.
100%. And the problem with waiting it out is the longer you wait, the higher the rates go, the more you're not going to qualify. So if you can qualify, call it a day, buy a house, get into your house and move along.
Yeah. And if you have questions, reach out to the Peggy Hill team, reach out to Mortgage Wellness. You can expect to see videos like this every month. But in the meantime, if you have questions, just give us a ring. Thanks so much for your time today, Peggy. Really appreciate it. Bye.
Bye.